Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the stock market wrap up for September 1st for you to use on the September 2nd stock market session. First off, I'm a little late posting this tonight, and that's because, once again, I get caught up in the chat room, blah, 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 keep talking, and this is what happens. However, I got the longs and shorts up early and got the forums done early, so subscribers, you got a little benefit. First off, I want to show something. Remember how the first breakout that we had here in Baidu down here didn't have any volume, so really if you bought it down here, you just would have been crazy. Or how whenever it broke out over here, you don't have any volume, so if you bought that breakout, you're just crazy, even though it's a leader. I don't care. I don't see how in the heck you still could have bought it. So here's your first volume breakout, and as you can see, the volume isn't very strong, is it? Well, now you can see you have a whopping gain of 0.93%, so once again, proving to you that once a former leader, no longer a new leader. So you guys that are still into like Google and Baidu, good for you. I'm moving on. I'm moving to new leaders. You can keep playing them if you want. I'm interested in new things. And right now, new things aren't working. You want to know why? Because the market appears that the negative divergence in NASDAQ is starting to work. First off, I want to show you China. Back in early August, you could see here that China had a V-shaped new high in August. Look down below. Look at the white line. That is the relative strength line. Do you see how it is not confirming a new high? It's making lower lows. That's called negative divergence and normally is not good for a stock index. Not always, though, obviously, but it's a hint to tread carefully here. And as you can see, the negative index gave way to selling. This is when it became apparent, oh, it's clearly rolling over. Hence the rolling over from July to August in the price pattern. That's why we call it a rollover. And it rolls over, breaks down below the 50-day moving average. And if you don't sell all here, oops, you just took a nasty haircut. And then you took another one, came back a little bit. Maybe you thought you were going to go and rally from here, so you bought the indexes here. Not another good move because now you've got some big painful losses. And from the top, if you would have bought that breakout to a new high, which if you did all the other times, you would have made money. But that time, you're now down 22% of your holdings. So with the China pullback, now let's go take a look at our markets, the NASDAQ. Reminding you that during this entire rally, the IBD index has lagged, and I'll show you at the end. Now look at the NASDAQ. Look at that white line. I have the white line there for a reason. I want you to see that it was trending higher. Do you see how the white line? So the NASDAQ made a higher high. Now look below you on the bottom. First off, look in the middle window. The higher high doesn't come on heavier volume, really. We're just one day of the entire up, 5 days up there. 1, 2, 3, 4, 5. 5 of the 6 days up. Only 1 day's above average. Kind of odd. You can see the new high. You see the relative strength line moving lower? That's your hint to be careful here. Still, our longs were doing great. As long as our longs are doing great, there's nothing to worry about. But come Monday morning, finally gapped down, but we put down an excellent intraday reversal. That was awesome. And we even had a new long, which, by the way, was up 5% today. So that's wonderful. But that was our only long, and there weren't any other new longs. So it meant we needed to tread carefully. Only having one new long isn't very bullish. You get 3, 4, 5 per day for a series of days. That's very bullish. But on the 28th, on Friday, how many new longs did we have? 0. On the 31st, how many new longs do we have today? 1, which worked out. It was up, but look at the market, down 2%. Look at the volume on this move lower. Look at the BOP. Look at the money stream. The relative strength line already confirming. This is a big distribution day. Now, I want you to notice something. When is the last time we have volume that big? Back here. Okay. How much are we up from that day? Oh, we're down. So, we're now down on the biggest distribution day that we've had going back to when? When was the last time we had a distribution day this big? Back here in May. And you can see last time we had it, we drifted lower for a while and then broke out higher. It's quite possible we can move higher. But there's not quite a day back here like today. You cannot find a day where the market opened lower, moved to higher highs in the day, hitting 2034 intraday. Actually, looking like it was about ready to go on and hit new highs. A lot of people thought it was going to run away, and then have such a big intraday reversal on such strong volume and finish down 2%. Not good for the NASDAQ at all. How about the New York Stock Exchange? Uh-oh. And now look at what we have here 3 days in a row. 1 distribution day, 2 distribution day, 3 distribution days in a row. Not good. And the volume's increasing. Here's a 3-day chart. What are the dominant bars recently in that 3-day chart on the New York Stock Exchange? If you said distribution bars, you're correct. And as you can see, also, NYSE hitting a new high. If you can't see it quite well, I'm going to draw this line here for you. Why isn't the D working? There we go. Okay, see how it's sloping up? See how it stair steps up there? So it's hitting new high. Relative strength line not. Next thing you know, breaking down heavy volume. That's 3 distribution days there. And if you go back to here, boom, boom, 2 distribution days with another 3. That's 5 distribution days along with 6 and a 7th one. Let's look at the Dow Jones Industrial Average, which was starting to lead here at the end. You can see, look at it. The entire time it goes up, look at what volume's doing. So while the Dow Jones Industrial Average is moving up there, volume's getting lower and lower and lower as it moves up. Now all of a sudden, hello, distribution day, pretty ugly reversal, and it's the worst day since back here, which like you can see, led to a little consolidation area. This looks a little worse to me. However, we could reverse on higher volume tomorrow, and if we do, that's extremely bullish. So just keep that in mind. If we reverse on higher volume tomorrow and 5 more than 1 long, that'll be bullish. We reverse on lower volume tomorrow and we don't take back what we lost today, probably going lower. And I wouldn't doubt if we go lower immediately tomorrow. Now let's go and look at the S&P 500. Probably going to be running out of time here soon. S&P 500, look at the day. Clearly distribution bar. Once again, boom, boom, boom. 3 in a row. 3 distribution days in a row. Followed by 2 there. Followed by 6, 7 there. So there are plenty of distribution bars now starting to inch up into these charts. And we're starting to have real rollovers. And let's see, is there anyone that we're up big on that's down that I want to show? No, I'll just save it to subscribers. And then I want to show you the small cap indexes, S&P 600, same thing. I want to show you the mid cap index, S&P 400, same thing. Pretty ugly day overall. Now I want to show you this. Look at platinum. Down, not doing well. Uh-oh, metals are going to be doing bad, right? Not so fast there. Look at silver. Very nice day. Look at gold. Very nice day. Now let's look at the ETFs. SLV. Not clean. Still in an uptrend. Look at GLD. Hello. Bouncing right off the 50-day moving average. And it looks like it wants to break out of... let's go in back here. It looks like it wants to break out of this long butt pennant formation. Look at how big that pennant formation is. Let's go on a weekly there. Let's go to arithmetic chart. Weekly. Let's expand this. Oh, it already is. You can see how nice and tight that formation is. We're getting near the apex. It's bouncing off the lows on very strong volume recently. Gold, well, not strong volume, but it's starting to pick up a little bit. And even though it's below average, which is never good, but gold is holding up and not selling off, and the market's selling off, so that's good. Hence the relative strength line. Hello, new little highs here for the past 1 month. Thanks, Spyware Doctor. So very strong bounce on the 50-day moving average support area. Volume picking up. Relative strength money stream looks good. Now volume looks like it's going to got to try to come back in. So right now I like gold and silver. So if you guys are looking for an area to invest, maybe if we go down, these things probably look like they want to go up. Let me see where I'm at on my time. 9 minutes. So now I will go ahead because if you're with me, might as well show you. This is the IBD 100 on a daily chart. Notice how it has a series of slightly, not so much, a little slight uptrend, not very strong at all, and hence the weakness in the relative strength line. Now I want to remind you, the relative strength line was already hitting new lows in March when the market was beginning its rally. Then it was hitting new lows again in April, then it was hitting new lows all throughout April, then it hit new lows in May, then it tried to build its relative strength line as it started to move up. Always looking like a possibility to probably come back. But then, sadly, in July, the relative strength line started to go down. And all the can slim hardcores start to get mad at me. What are you doing trading small stocks? What are you doing trading these thin stocks? What are you doing trading these cheap stocks? Geniuses, these are the stocks that are moving. So, can slim only followers, get off my butt. We've been right, you've been wrong. Our little stocks have worked, your stocks haven't. When your relative strength line leads higher, then I'll be going long. But I want to show you index breaking down on strong volume. And then also, I want to show you the IBD 8585 to show that it's the same thing. IBD 8585, look at how ugly this thing is. Now, hits lower lows in February, but the relative strength line starts confirming. That's great. So obviously, with the relative strength line having higher lows and the market putting in lower lows, whenever it starts to move higher with the market, these stocks are going to lead, right? Wrong. We get the bottom in March, breakdown on the relative strength line, breakdown in March, breakdown in April, breakdown in May, breakdown in June, another breakdown again in August to new lows while the price was moving up, and now another breakdown. And as you can clearly see, volume's picking up on the IBD 8585.